Hi and welcome to the week ahead with London Capital Group. Now we've come to the end of yet another busy week, and next week promises to be just as busy, especially on the corporate side, a touch lighter on the economic side. Now joining me to discuss the week ahead today is our very own analyst, İpek Özkardeşkaya. İpek, let's start. It's quite a quiet start to the week next week, but we do have China inflation and PPI data coming out overnight on Sunday. I mean, what are your thoughts on external and domestic demand in China at the moment?
Well, actually, what we see in China is that a slowdown in the economy, and we can see it in the inflation numbers. So the CPI is expected to have improved maybe slightly from 1.4 to 1.5% on a yearly basis. We are still very far from the 4% target of the Bank of China, which means that it's not going to do any. It's not going to give any enthusiasm to the market if we see a little improvement in the CPI. On the other side, the PPI, so the producer prices, are expected to contract even more, and this is quite bad news, meaning that this is a slowdown in China, and we can read it through the numbers, and it's not going to help the CPI. So now that all the inflation figures and the prices are under control, we can say, this gives room to the Bank of China to add more stimulus in the system. So it just boosts people's expectations on more stimulus, more injection of money, so to just sustain the economic growth in China. So
okay, I mean, well, if we take a look at Tuesday, we've got a few things on the economic agenda. We've got Australia NAB confidence, Canada housing starts, some US data as well, but we've also got the German and Eurozone ZEW surveys coming out. That's at 9:30 a.m, so no doubt they'll be driving Euro movement on Tuesday. But I want to move on to Wednesday then. I mean, we've got a UK labour market report. What kind of movement are you expecting to see in the British pound on the back of these data releases and in the lead up?
So what happens is that we were looking at Super Thursday this week, and the Super Thursday has been a complete flop. Everybody has been hugely disappointed by the fact that the BOE, the most hawkish members, just stayed on their position, saying maybe we shouldn't go for a rate hike just yet. So
hold off till next year.
Yes, so only one voting member said, okay, let's go for a rate hike. So that has been a massive disappointment in the market. So at this point, the expectations for a rate hike in the UK has been pushed to the first quarter of 2016, the earliest. So I guess that even if we see some improvement in the UK numbers, we are going to be looking at wages. We know that the wages are being improving, but it's not going to shift expectations to anywhere, because we had the Super Thursday, and Super Thursday gave us the answer. BOE is not ready to move anywhere before the end of this year. So it seems like the Fed is still ahead of this race.
Okay. I mean, it's very US heavy again on Thursday and Friday. Looking at the releases, what do you think is going to be the main dollar drivers over those 2 days? No doubt a big one will be US retail sales, will it not?
So what we see at the moment is that the market is decidedly looking for good data and looking to buy US dollars. So even if we have slightly good data, the market will be on the buy side of the game. So I think that the US retail sales, an expected improvement, might just push this trend even further on the US dollar, because we have just seen the NFPs right now. It has been less than expected, but the fact that it was more than 200k has been just a positive perception from the market. The market thinks that the Fed is just going to hike in September, even if it's going to be a baby step, even if it's like 10-15 basis point hike, the market is just very much set and decidedly walking there. So that means that if it's not very bad news, like contraction, like insignificant contraction in the numbers, I think that the appetite in the US dollar is ready to stay. I mean, we are just into a dollar bullish phase.
Okay. I mean, moving away from the dollar and moving on to Friday, I mean, we've got Euro-area GDP coming out on Friday. Do you expect much movement on the euro?
Frankly, not, because the Eurozone has its own problems right now. We've got problems with Portugal after the Greece. The Greece deal is not done yet. So in this situation, the GDP is going to stay subdued. The inflation has been improving over the past months because of the ECB intervention in the market. So we can see a positive surprise in inflation, but I think that the eyes are still very much on Greece, on Portugal, on how the peripheral countries are coping with this economic recovery. The recovery is not on a solid path yet.
The slide in energy prices and in general commodity prices, do you think the commodity sell-off is a bit overdone?
Well, commodity sell-off is like throwing a coin into a pit and just waiting where it's going to end. So now we just throw the coin and it's just falling. We haven't heard anything yet. So industrial metals have hit a 6-year low this week, and it's just like going down. We don't see any bottom, and the news are not positive. China is still slowing. The CPI numbers are not expected very strong. The PPI even worse. So I don't think that it's going to be bottoming anywhere soon, anytime soon, because the fundamentals are not there to support. So even if we see some recovery at the current prices, it is very much likely that we see a further downside and sell-off in commodity prices.
Okay, well, to wrap up then, what would you say your biggest trade idea of the week is? Where do you see the biggest opportunity?
Well, this week we have seen dollar yen just crossing about the main resistance zone at 124.50. So now we are just moving to 125 resistance. There is some serious testing. There are bulls and bears are fighting at this level. So the year high has been 125.86. Above this level, there might be some acceleration in dollar yen upside. It all depends on the US yields also. I think that the US yield will be recovering from the levels right now if the Fed expectation for a September hike just starts really spreading through the market. Yeah. So we can expect to see an acceleration if this 125.86 levels is breached, because we have a decent number of vanilla calls waiting to be activated at 125 levels, which should give some more boost to dollar yen on the upside.
Okay, brilliant, Ipe. Thank you very much. That's all for today's Week Ahead. Good luck trading and have a lovely weekend. Goodbye for now.